Hi, this is Andy Hoffman of CryptoGoldCentral.com, where I publish a daily crypto-focused blog and provide professional crypto consulting services to individuals and altcoin developers alike. I first got invested in Bitcoin in December 2013, $1,100 worth at the top of the Mt. Gox bubble, which I might add I will be getting some portion of back now that the bankruptcy process is finally coming to a close. Back then, it was a wild and woolly asset with a market cap that was still so tiny. The peak of the Mt. Gox bubble resulted in a market cap of just $14 billion. This compared to the bottom of the 2017 bubble's crash of $100 billion, i.e., the Hoffman Line. Mt. Gox represented the vast majority of all Bitcoin trading, with customer service so poor it made last year's horrifying industry wide service disruptions look benign. Additionally, there were no offline storage devices like Trezors, and with very few exceptions like Litecoin, no altcoins. Most investors had never even heard of Bitcoin, let alone invested in it, and the only reason I was so aware of it was because, in my role as marketing director of one of the nation's largest bullion dealers, and generally speaking, a high profile precious metal commentator, I was besieged with emails about Bitcoin each time it made a significant price move. For the record, if you dig up my podcasts on this topic circa 2012 to 14, my view was that it was an intriguing concept, but not a threat to precious metals, given how immature it was. After the Mt. Gox crash, I was disgusted with the horrible experience I had just endured of losing money at the hands of a lone hacker so powerful he was able to steal hundreds of millions of dollars worth. However, I was still intrigued and thus continued to watch it trade in a purgatory that lasted 18 months, during which the price held in a tight range of $200 to $300 and Litecoin $4. At this point, it was for all intents and purposes left for dead by a financial community that assumed it was just another flash in the pan that fizzled out. When Bitcoin started to revive in the fall of 2015, my interest was again piqued, principally because it had survived what could have been an extinction event in the collapse of Mt. Gox. Moreover, despite an incredible lack of interest following Mt. Gox, there had been no additional hacks of note. And given my experience of watching the precious metals market all but destroyed by paper dilution amidst one of the most egregious periods of central bank monetary inflation in global history, which I might add is far worse today, as an epic fiat currency crisis is clearly underway. This, as precious metal prices have plunged to multi year nominal lows and all time lows on an inflation adjusted basis. Perhaps even during Bitcoin's purgatory of 2014 to 15, precious metals were responding to the oncoming but still distant emergence of the digital age. But either way, demand was dying, as whether you attribute government price suppression, Bitcoin, or other factors, the financial stone age was coming to a close. This is why I invested heavily in Bitcoin in January 2016 and started talking nearly daily about it, despite the flack I received from my bosses given my role as marketing director of a bullion dealer. That said, at the time I thought Bitcoin and gold could be complementary assets, which I still believed when I started Crypto Gold Central, hence the name, in September 2017, as opposed to now when I believe gold will be a relic in the millennial and Gen Z dominated digital age that is arriving as we speak. In early 2016, Bitcoin finally emerged from its cocoon, having finally consolidated the Mt. Gox collapse and, as noted above, proven it could survive such an horrific event. Additionally, the July 2016 halving was approaching, which proved to be significant when the price nearly doubled in a few months' time. Bitcoin was officially back on the radar screen, but still had a market cap of just 10 billion. 2016 was actually a relatively peaceful year, as aside from the Bitfinex hack in August, the price rise was relatively steady, from 400 to start the year to nearly 1,000 to end it. Actually, the price finally hit $1,000 on New Year's Day, commencing what would be the wildest 2 years in my investing career, as not only was my Bitcoin position becoming a significantly larger percentage of my portfolio, but it was becoming wildly volatile, to the point that I now understood why the term hodl, or hold on for dear life, was coined. During 2017, the price rose from 1,000 in January to 20,000 in December, and yet it was as stressful of a time as any I can remember, given the enormous amount of seemingly relentless price crashes. First in January, when the Chinese government introduced Bitcoin capital controls, to the first SEC denial of the Winklevoss ETF in March, to the horrifying scaling debate that commenced immediately thereafter, when Roger Ver tried to destroy Bitcoin for the first time with Bitcoin Unlimited, as in unlimited block size. Throw in the BTCE exchange collapse, Jamie Dimon calling Bitcoin a fraud, the Chinese crypto exchange ban, the UAHF versus UASF saga, and myriad terrifying attacks by Bcash post fork. And it truly was a year of fear for Bitcoin investors, as despite the price rise, its very survival was still uncertain. Fortunately, Bitcoin justified my belief when it won the scaling debate and destroyed Bcash and all other monetary competitors. However, it now had to deal with the aftermath of the historic bubble created in the post-SegWit era that started in late December when the Mt. Gox trustees started dumping Bitcoin just as it got its frothiest, and got much worse when the hot Wall Street money that took worthless altcoins to astonishing dot-com-like valuations in January raced out as rapidly as it raced in, leaving us with the equally terrifying investment environment of 2018, in which TA fudsters with no interest in fundamentals or knowledge of them preyed on terrified hodlers and the tentative, clueless newbies with relentless calls for an imminent Bitcoin collapse. Not that any of them called the top, of course, as essentially all of them were calling for new all-time highs when at 20,000, though of course they'll all tell you otherwise. To me, 2018 was about consolidating the 2017 surge, just as 2014 and 15 were about consolidating Mt. Gox. Only this time, Bitcoin's fundamentals were stronger than ever, having survived the scaling debate to achieve 50+% SegWit adoption, a record hash rate, surging network speed, plunging transaction fees, and an explosion of innovations like the Lightning Network. This amidst the aforementioned rapidly expanding fiat currency crisis and the quite obvious death of precious metals' 5,000-year monetary dominance. Even at its lows, the $6,000 price was still higher than a year ago, and still today, it's higher than it was in early October 2017, given that Bitcoin's historic run to 20,000 didn't commence until November. However, nothing is more terrifying than the type of relentless, seemingly daily price crashes Bitcoiners have been forced to endure this year, let alone those foolish enough to hold significant portions of their crypto portfolio in altcoins, the vast majority of which have no material use case and thus non-existent price support. Worse yet is the prospect of losing life-changing gains, as it's one thing to see your investment rise, as I did, from $400 to $20,000 before falling back to the horrible price of $6,000. However, if it indeed fell back to King TA Fudster's malicious self-serving price target of $1,300, it would mean long-term hodlers will have lost most or all of their gains, despite having been dead-on correct in their assumptions of Bitcoin's survival and growth. And by the way, dead-on correct is the understatement of the century, as clearly Bitcoin is not only here to stay, but on the cusp of an increasingly visible, digital, decentralized monetary revolution that will unquestionably play a major role in the world's near future, and likely its long-term future as well. This volatility and fear reached a crescendo in late August, when the SEC quite inconsequentially delayed the SolidX VanEck Bitcoin ETF decision. And again in mid-September, amidst a capitulatory sell-off in altcoins, catalyzed by Bitmain's admission that Bcash was a Ponzi scheme, and numerous ICOs dumping their Ethereum positions. During these final selling crises, Bitcoin not only held the Hoffman Line like a champ, i.e. the $100 billion market cap, but rapidly stabilized before moving back up in what has been unquestionably the lowest period of volatility in its soon-to-be 10-year history. So much so, it's been downright eerie, with days on end of limited price and volume action, which is just fine with me after so many years of terror. Not that the Bitcoin roller coaster has stopped operating, of course, as it remains an extremely thinly traded asset that just happens to be attempting to usurp a powerful status quo with a long road ahead of it before global adoption takes place. However, the way I see it, Bitcoin is finally starting to become ubiquitous in the global financial community, as in its existence has been challenged and accepted by retail and institutional investors alike. In other words, whether you like it or not, it's becoming difficult, or better put, impossible, to claim it's not here to stay. Institutions in particular are warming up to it, given its defense of the Hoffman Line for what this month will be an entire year's time, not to mention the 1 year anniversary of futures trading that we're rapidly approaching. This is why the demand for ETFs and custodial products is exploding, and why, when January 1st rolls around, we're likely to see a far larger crypto hedge fund launch than a year ago. Not to mention, as the fiat currency crisis expands and the May 2020 halving inches closer, which I might add will get an additional turbo boost this summer when the August 2019 Litecoin halving shows Wall Street the power of monetary deflation. The way I see it, Bitcoin is becoming like Neo at the end of Matrix, when he realized he could not be defeated, and thus started shrugging off the myriad Mr. Smiths like they don't exist. In Bitcoin terms, governments, regulatory agencies, competing altcoins with quotes around it, and TA fudsters. Frankly, I've become so confident in Bitcoin's future, I no longer feel the need to seek out new information the way I was forced to do in 2016, 17, and much of 2018, or even broadcast it on my podcast, as at this point, I feel like I'm simply regurgitating the same memes that have proven to be correct and will continue to do so ad infinitum. When the next moonshot run commences, we'll just have to wait and see. As though it should start now, Bitcoin has become famous for moving when it wants to, how it wants to, and far more than anyone believes. At this point, its fundamentals have become so powerfully strong, the odds of the ultimate outcome are all but assured. As right before our eyes, against the odds, Bitcoin is achieving global ubiquity before it even reaches its 10-year anniversary. Thanks, and have a great crypto day.